If you are currently clocking into a normal 9-to-5 job right now, earning anywhere between $10,000 and $100,000 a year, and you feel like you are constantly running on a financial treadmill that never stops, I need you to pause and listen to this very carefully. What if I told you that you do not need to wait until you are a millionaire or until you possess a massive six-figure portfolio to completely change how money feels in your day-to-day life? What if the single most explosive, life-altering milestone on your entire wealth-building journey is actually just saving your very first $10,000? Now, the mainstream financial media will look at a number like $10,000 and dismiss it. They will tell you that 10 grand is nothing in the grand scheme of modern inflation, housing crises, and skyrocketing living costs. But they are looking at the numbers completely wrong. Your first $10,000 is not monumental because it allows you to retire early or buy a luxury estate. It is monumental because it completely alters the psychological and structural physics of your everyday existence. It is the definitive line in the sand between financial slavery and the very first taste of true personal freedom. Before you hit $10,000, you are operating in a state of constant vulnerability. You are one bad engine noise, one corporate downsizing announcement, or one medical bill away from complete and utter ruin. But the exact moment your master ledger ticks past that five-figure threshold, a massive shift occurs. You finally have breathing room. You finally have a structural firewall between your livelihood and the chaotic volatility of the modern economic landscape. Today, we are opening up the 9-to-5 Chimp ledger to show you exactly why everything changes after your first $10,000, and we are breaking down the precise math-backed corporate cash flow playbooks to get you there faster than the standard corporate timeline dictates, without requiring you to quit your day job. Let us look at the raw, unfiltered reality of the modern corporate landscape in the year 2026. Why is it that the vast majority of hard-working, disciplined 9-to-5 workers never manage to accumulate even a basic $10,000 cash reserve? It isn't because they are lazy, it isn't because they lack intelligence, and it isn't because they don't care about their future. It is because the modern economic matrix is elegantly engineered from scratch to keep a regular paycheck earner at an absolute net zero balance sheet. Think about the structural baseline cost hitting your bank account every single month. According to the actual data for 2026, the national average rent for a standard apartment has climbed to a staggering range of $1,144, $1,843 every single month. If you are earning a median salary, housing costs alone are aggressively consuming 40 to 50% of your liquid take-home pay before you even step foot outside your door. Then you look at the transportation trap. The average monthly car payment for a new vehicle in modern workforce metrics is hovering at a brutal $767 to $773 per month. When you add high-coverage comprehensive insurance premiums, maintenance, and fuel costs, a single depreciating metal box in the corporate parking lot is siphoning over $1,000 of active liquid cash flow out of your life every single calendar month. When you combine average rent with average transportation, you are looking at nearly $2,800 in non-negotiable overhead before you buy a single grocery item, pay a utility bill, or cover a healthcare copay. This is the structural bottleneck. But the physical numbers are only half the battle. The emotional weight of living with a $0 buffer is an absolute silent killer. Have you ever laid awake at 2 o'clock on a Tuesday morning, staring at the ceiling, wondering how you would handle it if your company suddenly announced a round of layoffs? Have you ever felt that icy knot of sheer panic in your stomach when a weird dashboard light illuminates on your drive to the office? When you have no cash reserves, every single day at your corporate job is performed under a low-level fog of pure survival anxiety. You are forced to tolerate toxic corporate cultures, you have to say yes to unrealistic managerial demands, and you have to bite your tongue during useless meetings because you know you are exactly one missed biweekly direct deposit away from absolute catastrophe. You aren't building a career from a position of strength. You are trapped on a highly decorated middle-class hamster wheel, completely dependent on the system just to service a lifestyle made of rapidly depreciating consumer goods. But the exact moment you cross the five-figure finish line and lock down your first $10,000 in cold hard cash, the entire atmosphere of your life completely transforms. This is the everything changes moment. Let us analyze the psychological rewiring that occurs inside your brain. First and foremost, your baseline sleep quality plummets out of the danger zone and settles into deep, authentic security. Why? Because a liquid $10,000 asset base, safely tucked away in a separate account, covers roughly 95% of the random, unexpected financial emergencies that real life can throw at a human being. If your vehicle's transmission completely explodes on the highway, it is no longer an existential crisis that forces you to take out a high-interest predatory loan or carry a toxic balance on a credit card. It is simply a temporary mechanical inconvenience. You pay the mechanic, you sign the ledger, and you move on with your day in absolute silence. The emergency has been completely downgraded from a life-altering tragedy to a mere line-item expense. Furthermore, look at what this does to your career confidence inside the corporate infrastructure. When you have $0 in savings, you walk into the office out of pure fear. You are terrified of your micromanaging boss, you are terrified of a bad performance review, and you are terrified of standing up for your boundaries. But when you have a $10,000 liquid fortress backing up your life, those heavy, invisible handcuffs completely melt away. You gain immense personal leverage. You stop panic checking your banking application every single Friday morning to see if the direct deposit cleared. You carry yourself differently in corporate rooms. You speak with more authority, you negotiate for higher pay from a position of security, and you gain the psychological breathing room to say no to toxic, uncompensated overwork. You no longer view your day job as a desperate lifetime sentence for survival. You begin to view it as a venture capital fund for your personal balance sheet. You are no longer working to avoid ruin. You are working to accumulate assets. That shift in human psychology is worth more than the physical $10,000 itself. Now let us pivot away from the psychology and look directly at the raw operational power of $10,000 on your actual financial statement. From a structural standpoint, your first $10,000 acts as your premier elite emergency firewall. It is the definitive foundational rock upon which your entire future wealth engine will be constructed. But more importantly, it builds the crucial initial momentum required to spark the law of compound interest. When you have $0 in your investment engine, your capital growth speed is exactly zero. Every single dollar of your net worth has to be violently scraped out of your active physical labor. Your money is completely lazy because it doesn't have a base. But when you accumulate $10,000 and deploy it into a high-yield savings account, earning a competitive modern market rate of 4 to 5% annual percentage yield, something magical happens. In absolute silence, without you having to trade an extra hour of your time, answer a single Slack message, or sit through a corporate performance review, your $10,000 base generates roughly $400 to $500 of completely passive income over the course of a single year. Now, $400 will not allow you to buy a sports car, but think about the philosophical shift. That is $400 of completely free wealth added to your balance sheet without you sweating for it. It is money that grew while you were sleeping, while you were sitting in a cubicle, or while you were spending time with your family. Your capital has officially taken its very first baby steps toward becoming a second earner in your household. It proves to your subconscious mind that the economic rules of compounding wealth are completely real and that they can actually work for you, a regular 9-to-5 worker, rather than just working for the elite trust fund gurus on television. So how do we actually execute this strategy and hit this milestone inside the modern corporate landscape? We cannot apply a broad, generalized strategy to every single salary track that breaks your monthly budget dynamics. We must divide your path to your first $10,000 into 3 clear math-backed salary tiers based on where your career stands right now. If your current employment contract places you inside the Tier 1 zone, I want you to hear me clearly. You do not have a spending problem. You have an income bottleneck. Mainstream personal finance gurus love to make you feel immense personal guilt for buying a morning coffee or maintaining a basic digital streaming subscription, but the raw math shows you cannot budget your way out of a low salary base. If you make $30,000 a year, your net take-home pay after standard taxes and healthcare deductions leaves you with absolute zero margin. Your strategy in Tier 1 is orderly and precise. Completely ignore long-term retirement optimization or complex stock market picking for a brief moment. Your absolute highest priority is to upgrade your active earning power. You are the highest yielding asset on your balance sheet. The modern job market does not reward blind corporate loyalty. It rewards specialized, verifiable skills. Use your evening hours to acquire high-value operational skills, technical certifications, or professional licenses that can jump your career out of Tier 1 and straight into Tier 2. Sell your labor to the highest bidder, switch companies strategically every 2 to 3 years, and pull your baseline salary up by $15,000 to $20,000. Once you cross into the Tier 2 zone, you have entered the median baseline of the workforce. The acute survival anxiety of Tier 1 is gone, and you finally have real, measurable breathing room at the end of the month. To capitalize on this tier and lock in your first $10,000, you must implement a strict automation playbook. The very hour your biweekly direct deposit hits your primary checking account, an automatic transfer must instantly route $200 to $500 straight into a separate high-yield savings account that is completely unlinked from your daily debit card. Do not wait until the end of the calendar month to see what cash is left over to save. If money sits idle in your primary checking account, your everyday spending will naturally expand to consume it. This is a psychological law. Pay yourself first, automatically, and let the numbers grow in silence behind closed doors. When your contract scales into the Tier 3 high-earning bracket, you possess an incredibly powerful financial weapon. At this level, hitting your first $10,000 is not a matter of survival. It is a pure matter of allocation efficiency and cutting one major financial leak. Look directly at your fixed overhead. If you are making a high salary but still living paycheck to paycheck, you are paying what I call the corporate title tax. You have systematically scaled up your housing footprint or your automotive choices to match your new corporate title. To win here, enforce the strict allocation constraints. Cap your housing footprint at 35% of your net income, keep your vehicle expenses under 10%, and aggressively capture your company's 401k match. If your human resources department matches up to 4 or 6% of your salary, contribute exactly enough to claim that full match. That is an instantaneous, risk-free, 100% return on your capital before the market moves a single millimeter. Leaving a company match on the table is literally turning down free salary. As you actively execute this playbook and watch your balance sheet begin to climb toward that iconic $10,000 milestone, you must be hyper-aware of the common psychological traps engineered to derail your progress. The first and most dangerous trap is the lifestyle creep after small wins. When a 9-to-5 worker successfully saves their first $3,000 or $5,000, human psychology tricks them into feeling a false sense of financial elite status. They look at their growing account balance, experience a massive burst of dopamine, and immediately reward themselves by purchasing a luxury vacation, upgrading their tech gadgets, or dining out at expensive premium restaurants. They systematically liquidate their momentum just as it is beginning to form. You must resist this urge. Treat your first $5,000 not as spending money, but as an unfinished, vulnerable fortress that requires immediate reinforcement until it reaches the full $10,000 target. The second major trap is the classic "I'll start next month" syndrome. Workers consistently convince themselves that they will begin their savings protocols as soon as they finish paying off a specific holiday expense, or as soon as they clear a busy seasonal month, or as soon as they receive their next projected corporate raise. But the data shows that human behavior rarely changes when context changes. If you cannot find a way to automate a mere $50 or $100 a month out of a tight budget today, you will never possess the internal discipline to manage a larger surplus tomorrow. Finally, stop leaving your core capital reserves to rot inside traditional low-interest checking and savings accounts at big chain commercial banks. Leaving your money sitting in an account yielding a terrible 0.01% interest rate is literally handing your purchasing power over to inflation. Move your capital to an insured, high-yield infrastructure that actually preserves the density of your hard-earned labor. Ultimately, building your very first $10,000 from absolute scratch on a regular corporate paycheck is a purely mechanical, orderly process of maximizing your active margin, automating your cash flow speed, and fighting back against consumer culture. Your first $10,000 isn't just a random collection of digital numbers inside a banking application. It is definitive, undeniable, math-backed proof that you possess the operational discipline to beat the system while keeping your 9-to-5 job perfectly secure. If you are completely ready to stop guessing with your personal finances and start using a clear mathematical blueprint to purchase your permanent freedom, make sure to hit that like button and subscribe to 9-to-5 Chimp right now. We break down the real numbers, the raw metrics, and the practical corporate cash flow playbooks every single week so you can build massive quiet wealth behind closed doors. Now, let us open up the Community Master Ledger right here in the comments section below. I want to run a live compliance audit across our audience to see exactly where everyone stands on their wealth journey. Drop a comment right now with 3 quick, clear numbers. First, your current salary tier track. Are you navigating Tier 1, Tier 2, or Tier 3? Second, your true net monthly take-home pay after all taxes and human resources deductions. And third, your current target monthly investment and saving speed. How much are you actively automating away from your primary checking card every single month? Are your local housing markets making it tough to find a margin, or have you already locked in your automation engine to build quiet wealth behind closed doors? Let us analyze the real data, support each other, and audit the numbers together in the comments down below. Once you have posted your metrics, make sure to click on the next video appearing on your screen right now to keep optimizing your personal financial engine. In the next breakdown, we are going to look at the next major hurdle, the $20,000 and $50,000 milestones, and show you how the velocity speeds up even more. Protect your cash flow, stay highly disciplined, and I will see you in the next master breakdown.